Hello, I'm Lel Smits for Australia's Finance News Network, and joining me in Hong Kong is the CEO of Fortescue Metals Group, Nev Power. Nev, welcome to the show and to Minds of Money.
It's good to be here, thank you.
Fortescue cut staff spending and your expansion plans at the end of last year as a result of the plunging price for iron ore. Has the action delivered the desired result?
It has, Lelda. It allowed us to reduce our operating costs by accelerating a lot of reductions that would have happened over a period of 12 months or so. And by deferring the Kings project, it allowed us to smooth our capital expansions going forward. I'm very happy to say that we've now recommenced that project, and the Kings project will be completed by the end of this year, taking us to 155 million tonnes.
Okay, now reports have speculated Fortescue could gain up to $8 billion from the sale of a stake in your wholly owned rail and port network, the Pilbara Infrastructure. What price tag would you put on the sale, and how are talks progressing?
We're looking to sell around 30 to 40% interest in the infrastructure assets, and we think that would net around 3 to 4 billion, which would allow us to accelerate the pay down of our debt. We've got a lot of interested parties in that asset sale, and that process is going very well. And we would hope to bring it to conclusion around the middle of the year.
Right now, at the time of last year's spending cuts, Fortescue cited volatile market conditions and uncertainty over the future price of iron ore. How has your outlook changed since?
Well, there's a lot more certainty in terms of the market in China. A lot of the issues around last September were driven by a lack of certainty around the Chinese economy. I think with the new leadership in China, we've seen a lot of new stability come into the economy there, and we're certainly very confident about the long-term demands from China.
Okay, Nev, now where do you see the price of iron ore moving this year, and what price band would it need to reach in order for Fortescue to move out of the red?
Well, we see the price being $120 to $130 for the balance of the year, but we do expect to see some volatility around that range driven by short-term factors. And at those prices, Lelda, we are well and truly in the black and making very good margins.
Okay, Nev, now looking closer at your expansion plans, Fortescue is targeting an annual production rate of 155 million tonnes per annum by the end of this year, as you mentioned before. But how is the company tracking?
We're on track to do that. We'll bring on the Firetail project in April of this year and expand up to 115 million tonnes by the end of April. And then the final piece of our expansion, the Kings project, will start commissioning in around October and be at full 155 million tonnes by the end of December.
Now, turning to some joint ventures, which include Fortescue, you've recently inked a deal with gold producer Northern Star Resources, in a deal which will see Northern Star pay to earn a JV interest in your non-iron ore rights. But could you explain how you believe this will benefit Fortescue?
Well, this is about bringing in another company that's got expertise in looking for non-iron ore prospects on our vast tenements. So we recognise that while we are specialists in iron ore, there are other companies that can add great benefit to exploration and other minerals. And we think Northern Star is an ideal partner to be exploring our tenements for those minerals.
Right now, Fortescue abandoned a potential oil and gas deal with oil basins earlier this year. Are you still eyeing any potential opportunities, however, that may lead to some diversification?
That investment was about helping us put a hedge in place for our energy usage in the Pilbara. We run our own power stations in the Pilbara, and we're looking for options to convert a lot of that power generation to gas. So that was just one option in that process. We're also looking at piping gas in from the coast, which would allow us to convert those power stations to gas.
Finally, Nev, what do you anticipate will be Fortescue's biggest share price drivers in 2013?
Well, clearly the iron ore price is the number one standout in terms of factors on our share price. But we see the long-term iron ore demand as being a much more important factor to consider. The other key issues for us is achieving our expansion volumes on time and on budget, and we're well on track to do that.
Nev Power, thank you so much for joining us in Hong Kong and for the update to Fortescue Metals Group.
Thank you, Lella.